Hey, everybody, super excited today to talk about a zero down payment FHA loan. Great loan. It allows pretty high income. So, even though there's income limitations, really high income based on the state median, 160% of the state median income. So, this is super fantastic. The money doesn't run out, it is available. It's not one of these programs where we have it for a week and a half and all of a sudden it's gone. So, this is super exciting. What happens? Okay, well, FHA will finance 96.5% of the purchase price. They require 3.5% down. The way this program works is it provides a second mortgage. One option is that you pay a quite a bit higher interest rate, and there's a second mortgage for 10 years that goes away after 10 years if you don't refinance or sell your home. If you sell or refinance, that mortgage has to be paid off. The second option, and the better option, in my opinion, is where you get a second. It's financed over 10 years for that 3.5%, and it's 2% above the start rate on your first. But that means no matter what, that loan is gone within 10 years, whether you refinance or whatnot. So that, to me, is a better option. You also get a much better rate. Again, these rates are slightly higher than a regular FHA if you saved your own money. Remember, even on all of these, you still have to have closing costs, prepaid taxes, homeowners insurance, lender, title, appraisal, and such. So I'll show you an example at the end on the difference between if you come in with your own 3.5% plus closing costs versus if you use this program, the difference in payment, difference in cash to close and everything. But again, this is a great program because it allows you to get into a house a lot sooner than waiting. And remember, we're probably going to refinance you within a year anyway because rates are going to drop and you're going to save money in the long run. So again, if you just find that house you want, this allows you to jump sooner. Super excited about it. All right. There are income limitations, again, 160%, but again, pretty high. We can go over those with you. Beautiful thing is you can do this with a 600 FICO score and above, and FHA lowered the mortgage insurance about 2 months ago to a much more reasonable level, so it doesn't make the payment as expensive as it used to be, like even 4 months ago. But again, great program, way to get in early. So let me just go ahead and show you real quick on the screen. So these are two different options. One is if you regular FHA, you put your 3.5% down, closing costs and all that good stuff, and that would allow, of course, almost $41,944 total cash to close, and a payment of about $4,568.56. On the option with no 3.5% down out of your pocket, that total cash to close, this is everything, right? On the right-hand side, if you get that second and you don't have to come in with that money for the 3.5% down, you only have to come up with $21,153. And by the way, that $21,153, again, on this example of $600,000, could be paid for by a seller if you can negotiate for any or all of it, or a gift from a loving family member that wants to really help you get in a house. That could actually be paid with gift or from the closing costs from the seller if you can negotiate that. On the right-hand side, you can see that payment's higher because it includes the first and the second and a slightly higher interest rate. But remember, this includes the payment on the second, which would be done in 10 years, and then that payment goes away and you'll have a lower payment. Again, we're probably going to refinance you within probably 1 to 2 years for this payment to come way down, but it allows you to get in now if you find the house of your dreams. Tim Harrison, HLC team, Cornerstone Home Lending. This is our educational series, the Straight Up Mortgage Talk. Talk to you soon and call us if you have any questions. Bye now.